Another blow for Greece. Moody's and Standard & Poor's say they may cut Greece's debt rating in the next few months. Both rating agencies say the country needs to cut back its deficit to 8.7% of GDP. For reaction, we're now joined by Daragh Maher, Deputy Head of Global Foreign Exchange Strategy at Credit Agricole. Daragh, we know that S&P and Moody's are looking closely at the Greek situation, but once again, this appears to have come out of the blue. Who's in control here? Are the rating agencies really the ones at the end of the day who are going to decide what happens to Greece and ultimately what happens to the EU and the euro?
Well, I think the rating agencies play a critical part because in terms of a further downgrade, it could have quite serious implications for Greece's ability to raise debt or the price they'll have to pay. So they are central to this argument. I think one of the difficulties of is it was a conditional statement. They said they may be prone to a downgrade if we don't get the moves on the fiscal side. Obviously, Greece is claiming it is committed to those improvements. So by rights, perhaps we'll escape the downgrade. But for a market, news of this kind of nature, of course, puts a spook back into it, and we're seeing that reflect in currencies.
Daragh, one quick question. I mean, you and I were speaking earlier, and you said the interesting thing is that the markets thought we had one more month to think about Greece, but here it is in the headlines. It's not going away. It's clearly outweighing everything else. What levels are you looking for?
Well, I think on euro-dollar, the market still seems a little bit fixated on 135. We've broken beneath it this morning. We've tried to clamber back above it. It does feel as though we're oscillating around that level. If we can close above it, maybe you'd say the market's taking a view that a lot of the bad news is already in the price of the euro. We already have a big Greek discount in there. If we close below, then of course it changes the technical complexion, and we'll have a lot of rationalizations for why euro-dollar and euro-yen and the like are going to keep unfolding.
Daragh, does it matter anymore exactly what S&P and Moody's rate Greece? Because even a BBB- rating implies adequate protection, at least according to S&P's definition. Is it all just a question of the direction, how fast, how soon, and how deep?
Yeah, I mean, I think what the market is hoping for in Greece is that we kind of say this is as bad as it gets, and things are going to improve from this point forward. And that becomes a slightly trickier story to sell if you're doing it against a backdrop where rating agencies are downgrading and changing outlooks to negative, etc. So, I think policymakers in Europe, they've leveled, if you like, similar rhetoric at Greece. You need to sort yourself out or there's going to be a problem. That's all S&P and Moody have said. So really the market now is to see what does Greece do, what does it deliver.
All right, that's Daragh Maher from Credit Agricole on the latest developments with the euro and the threat of another Greek downgrade.